Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at some Forex charts and in particular cross rates against the British pound because as most of you guys know, the vote we're having here in the UK this Thursday deciding on whether we're going to stay in Europe or whether we're going to leave Europe is obviously a pretty significant event and particularly significant for currencies in relation to the British pound. So let's open up a workspace that I had for some Forex charts. Let's look at some slightly longer term charts, some daily charts, and let's start off by looking at the British pound US dollar. I'll just zoom that down a bit. Now what we're looking at in our MTPredictor customers only training webinar a while ago is we were looking at this TS1 sell. And what we had here was we had basically a swing down to this major low, which was a DP buy. I placed a DP resistance off here is what we do. The last swing into major high or low, we do DP resistance, and noted that this high here on the 3rd of May was just about at the DP. It was within a pip or so of the DP. So I deemed that to be important resistance. The market then made a decline down, then made a correction back up into the 26th of May here, which is where we got a TS1 sell. If I right mouse click and do the analysis, what I was looking at this in our customer webinar is I was actually saying that rather than having a trade down into the first target, I was looking at this as a MTPredictor Holy Grail trade setup at the time and saying that this seemed to be a pretty significant high. This would be the initial decline, which is wave 1. This would be the initial correction back up here into a wave 2. That wave 2 subdivided into an ABC, and therefore we're looking for a wave 3 kind of decline. Therefore the target for this would have been the typical wave 3 WPT, which as you can see the market came down here very nicely indeed and just hit that target on the 16th of June. Remember, we use correct position sizing. In this case I'm risking 2% on a sample $20,000 account, and this would have been shorting 3 mini lots, and the profit would have been a nice 5.4R. This is why we use position sizing, because our profits are related to our losses. In other words, the size is adjusted compared to our initial risk, and therefore profits are related directly to the losses. So this is what I was looking at, and as you can see the market unfolded absolutely perfectly here. The British pound has rallied against the dollar, I think because the polls have now switched from predicting a exit from Europe to predicting a remain in Europe, but obviously we're a few days away from the actual referendum as yet, so we don't know what it is. But the point being is that before this decline happened, we had a TS1 sell here. The target I was looking at in our customer training webinar was the typical wave 3 WPT, and that resulted in a nice profit. This is another good example of why I've developed my isolation approach to Elliott wave, because some of you guys who are looking at this will say, well, if I called this as a major high, this is wave 1, this is wave 2, this is wave 3, surely you should get a wave 4, then a wave 5. This is the problem with traditional Elliott wave, is that Elliott wave breaks down. It breaks down because the markets are only in a clear position about 50% of the time. This is why I developed my unique isolation approach to Elliott wave, in that we're only looking at Elliott wave in isolation. In other words, here I was only looking at this as a potential wave 2 to then only trade into the typical wave 3 for the trade. Then after that the market can do what it wants. So in other words, the pattern here is broken down, but who cares? We don't worry about that at all. We had a nice low risk trade stress up. We had a profitable trade where the profit was 5 times the initial risk, and that's all we should be focused on as traders. So that was a great example of the British pound against the US dollar that unfolded on basic rumours of a Brit exit, then rumours of a Brit remain, and as you can see the currency had quite a volatile move there, but MTPredictor caught a very nice trade in between. Let's change this to another one that I was looking at, which was the Euro GBP, which obviously is another one related directly to Europe, i.e. the Euro and British Pound currency. What I was looking at here was I was looking at this TS4 buy setup. we had another buy setup a bit earlier here, which actually produced a losing trade. And it's important to include losing trades in any video, because losses can, will, and do happen. I'll say that again. Losses can and will and do happen. It's important that people know this, that every trading approach will always have losses. But remember, we use correct position sizing. Can you see here? This would have been 4 mini lots this time, again keeping our risk the same as we had on our British pound trade. This would have then produced a loss. The loss would have been what we call -1R, or 1 risk unit, but if you remember in the last example, that last trade was +5. That is why we use position sizing, because the profits are large, the losses are small. So that would have been a losing trade. The next one I was looking at here was this TS4 buy setup. Let's place the analysis on the blue buy bar. The faraway target was right the way up here at potentially 7.3R profit, which would have been a very nice trade indeed. But the area where trades will go wrong, or start to go wrong, if they're not going to reach the first target, will be the DP off the wave B, which is the wave B here. So we place the DP on that. Remember, these levels can be on the chart in advance. They're leading indicators. They're there before the market gets there. If I take the profit target and bring that down to that level, you can see that the market just tagged it on the 16th of June. That was the same day as we had the low on the British pound. Of course, all markets are correlated. Well, not all markets are correlated, but the ones that are correlated, i.e. against the British pound in this particular example, you want to be keeping an eye on both of them. So when the British pound against the US dollar reached its target, and you're at a level on the euro British pound, you ought to be having a look at trying to take profits on that, or at the very least trail below the bar lows, i.e. the day's lows. If you had have done that, you'd have locked in a nice profit of 3.3R. If you'd have come out at the target there, it would have been a nice profit of plus 4.8R. The Euro GBP has now dropped a bit since then, again on the rumours of the polls changing to a remain rather than an exit. Obviously we are a few days away from the referendum as yet, so we don't know what's happening, but I thought this was yet again another good example of how MTPredictor has caught some nice trades in the forex markets, particularly related to the British pound, when quite a few people are saying that obviously they don't know what's happening and there's confusion going on in the forex markets by a lot of people. Well, there isn't in MTPredictor. Remember, half the time markets are unclear, but half the time when they are clear, you get some nice trade setups. When you do, you keep your initial risk small. There will be losing trades, as we saw a bit earlier here, but those losses are kept small. And when you get the clear picture, you have a trade which has a profit greater than the losing trades, and that's what makes money overall. So hopefully this has been a good example to look at how MTPredictor has been handling the EU referendum in the UK here in relation to some British pound forex cross rates, in particular against the euro here, and as we saw a little bit earlier against the British pound US dollar, where we've had a couple of good trades in both of them.